Well, U.S. stocks have shot up 7% this month after a miserable May and June. And while that has some investors feeling a bit bullish, some of Wall Street's best-known bears are still holding their ground. Sarah Eisen spoke to a few of them, and they're not changing their view, right?
No, Betty, these are the classic worry warts. Marc Faber, David Rosenberg's not buying into the good news one bit. They've got pretty solid track records to back it up. Faber, for instance, told investors to buy stocks at the March bottom last year. Then the S&P rallied as much as 70%. Now he says the U.S. economy is so full of debt, stuck in a period of slow growth and high unemployment, that the Federal Reserve will soon need to revert back to crisis-era policies.
I'm convinced they will implement further quantitative easing, and massively so. It will probably happen in September, October. The economy is not robust. We have mixed signals, but in general, the economy is still weak.
And he expects more quantitative easing from the Fed. They're also not buying into the good earnings news lately. Big beats, for instance, from J.P. Morgan, Alcoa. Rosenberg of Gluskin Sheff says earnings are not a leading indicator of the economy. What is? Data like housing. And it's bad news there. Mortgage rates are at record lows. Meanwhile, new home sales are also at record lows, so not helping very much. He's been pretty spot on, too, telling everyone they were crazy last year, calling for rising inflation and Federal Reserve interest rate increases, both signs of economic health. So far, that deflation call and the Fed on hold are proving to be right. And finally, I asked them, they must be convinced that Europe, the worst is over, the euro at 130, right? Faber says, no way. Europe doesn't have a shot at growing. It's stuck in a sideways economy for years, he says, as austerity cuts and bailouts weigh on growth.